take us home today.
Thank you, Mike. Thank you for those kind words. It was very inspirational to hear Christy this morning, and I feel honored to get to introduce you, Bob. So it is a pleasure to introduce Bob Broeksmit, our President and CEO of National MBA. I want to start by sharing just a little bit about Bob's, accomplishments and resume. He is a 36-year veteran to this industry, and he has actively led in probably all aspects of lending, from marketing to sales and origination operations, including credit, loan servicing, default management. So the resume is broad. He came to MBA from Treliant, where he was leading over executive office and heading up over mortgage litigation services support for one of the most reputable firms for consultancy to the financial services industry. And prior to that, he has what we like to refer to often as a lot of street cred. He led for years at an executive level at Chevy Chase Bank and their subsidiary BF Saul Mortgage Company, and prior to that, Prudential Home Mortgage. So you can imagine when he became a candidate at a time where the crossing over and handing off the baton was so important that it was invaluable to that selection committee. Further, he had been the chair of the Residential Board of Governors for MBA, affectionately known as ResBOG. He had served on the investment committee, MORPAC, MA. He has a CMB designation, and to top it off, he is a graduate from Yale. So honestly, when you look at those accomplishments and that resume, we were just blessed at that time. But I think what I want to share the most in the handoff of this to Bob is that Bob and I have met before, but it's not as if we really personally know each other. But I often felt like I knew him more deeply than I did. And I am reflecting on that when Mike asked me to introduce him. I realized that it was probably largely because two executives that I'm very fond of in my life were on the selection committee. And so I remember at the time getting a fair amount of feedback. One of them, many of you know, in the Northwest, Rich Binion, who was the executive to Home Street for decades, and he's held in such high regard to this group. And the other one, my current CEO, Peter Norton, who's in his, second or I don't know, maybe third term of MBA. We're both on the selection committee. And I reached back out to both of them in this last week to ask them to remind me sort of, what it was at that time that really struck me about the choice of Bob coming into office. And Rich's comments were that there were actually a few amazing candidates at the time, that we were really blessed to have people with, extraordinary backgrounds. But he commented, one, that he had worked in small working groups with you, Bob, decades past, in which he was just really struck by your intellect, which seems to come up in anyone who talks about you. And he said, but the shining difference was just your character, just the nature of your humility, that you're willing to be vulnerable as a leader, and just the way it shines through. Also spoke deeply about your sense of humor, which is saying a lot from Rich Binion, who we all know has a great one. And then when I reached out to Peter, he literally texted me words of affirmation that it was just incredible. He said, first, his intellect is just absolutely extraordinary. He said he is personally amazing and professional at absolutely all times. And he, there's never a second where he lacks integrity and just doesn't have the heart of our mortgage industry in the best interest. And so I just wanted to share those things with this group because, the resume is one thing, but the way in which people view your character and what you've done. As a member of ResBOG, myself, the last couple of years, I'm passionate, and also why I took the chair position for WMBA, about the difference that we can make. And you probably had no idea when you took this role, the differences that would be able to be, especially in the COVID environment, with everything going on with the provisions of the PSPA and what you've done for the forbearance rules and clarity and the new servicing requirements for IMB. I'm sure you'll be speaking to some of those things, but really, we feel incredibly fortunate in this industry that you took the helm. So without further ado, thanks for joining us here today. We're thrilled to be able to have you to speak with this group. They're a great group.
Well, thank you so much, Rosemary. That's by far the nicest introduction anyone has ever given me. And these are words that my wife would not recognize when you describe me, so I really appreciate it.
Well, we're happy to share. So you just send her our way. Have a great day.
Well, great to be with all of you. And indeed, it was a heady experience. It's 3 years ago now. I started at MBA August 20th of 2018. And so those experiences with the selection committee were a little over 3 years ago now. And I'm sure some of you have been through experiences where you're working with a recruiter and you're talking to a prospective employer and you're not perfectly prepared. I went into the headhunter's office here in Washington and expected 3 or 4 people. I had a mile-long conference table with 14 members of a selection committee arrayed around it, and it was really quite an, at first intimidating and then really constructive process. But I really appreciate the fact that the committee saw fit to offer me the job, of course, with the board's concurrence, and am now 3 years into the mission. And I like to say that the pandemic year should count as a dog year, so it's closer to 10 years, but really happy to be here and to represent each of you in the other Washington. So I'm sitting at 19th and M Street here in DC. I'm just back literally 5 minutes ago from a luncheon where the controller of the currency spoke, and I got to ask a question about what can we do to not follow the disastrous rollout of the rental assistance funds with our homeowner assistance funds, because as you probably know, Congress appropriated $10 billion in homeowner assistance funds, which could be used for things like helping borrowers come out of forbearance, if to the extent you go through all the other options and none of the loss mitigation options work for you. But we've got to get the money to the servicers to be able to use with borrowers. So anyway, that's the sort of stuff that we're back to in person in Washington. That was an in-person luncheon just now in DC. But let me start with what I presume is the news of the day, since it just came out after the markets closed yesterday. After long and vigorous work by us and of course others, but we'll take the credit for leading the charge, the parts of the PSPAs, of which FHFA and Treasury are party, that restricted the GSE's purchases of second homes and investment properties, of layered risk loans, put an additional cap on multifamily loans, and limited access to the cash window, were suspended yesterday by mutual agreement of Treasury and FHFA for a year. The way I read that, as opposed to why weren't they just repealed, I think that the rationale, one could quibble about whether it's believable or not, since this happened in the last 6 days of the Trump administration. Those PSPAs came out on January 14th, was that as long as Treasury's got a big investment in the GSEs, they should trim their risk some. Well, as you all know, the implementation was a little rocky, to say the least. The 7% limit on second homes and investors was said to be at what the market was producing at the time. Turns out that that might have been what the market was producing in the third quarter of 2020. It was certainly well below what the market was producing in January of 2021. And a lot of you on the call, I'm sure, were stuck in a situation where you had made commitments to borrowers based on being able to deliver loans to the GSEs. And then you're, I'll have to say, a hapless GSE rep who doesn't want to treat you that way, had to call you up and say, you are going to be severely curtailed on what you can deliver because we're getting no flexibility from FHFA on meeting these requirements, which basically went into effect retroactively. I won't get into all the details, but that's effectively what happened. anyway, so we're delighted that our efforts, which started with a March letter to Treasury and FHFA, followed up by a June welcome to the acting directorship, Sandra Thompson. I won't even call it a letter. It was more like a laundry list of all the helpful hints, the things we think you ought to focus on. And of course, the adverse market refinance fee was first among them, but this was very much near the top of the list. And then just last week, as we try to amplify our voice in Washington to help our industry and the consumers we serve, we joined with 3 other powerful trade associations, the National Association of Realtors, National Association of Home Builders, and the American Bankers Association, and jointly wrote to Sandra Thompson and to Treasury Secretary Yellen and urged them to get on with it and take these parts out of the PSPA, which really have to do with powers that FHFA should have, right? They're the conservator, they're the regulator, they're the supervisor. If they think it's important or prudent to have limits on the GSE's lending activities, they should do that through their supervisory authority, not through some contract between Treasury and FHFA. So anyway, all that to say, we've been working on this really since January 14th when the PSPA amendments came out, and we're very gratified that that they were removed yesterday. So more broadly, you're also, I'm sure, seeing accounts in the trade press about who might run FHFA longer term. As you know, Director Calabria was removed the same day the Supreme Court ruling came out that gave President Biden the ability, or any future president, the ability to remove the FHFA director other than for cause. Till then, the director was only removable for cause. That same day, he showed Mark Calabria and his senior political staff the door, and Sandra Thompson, with whom we've had a long and constructive relationship, took over as acting director. And you've seen some rumors starting Friday or over the weekend that the administration might nominate someone else to run FHFA. The name that's been published is Mike Calhoun at the Center for Responsible Lending. And there is certainly a case to be made that Sandra Thompson, who not only has, I forget, maybe 9 years at FHFA in pretty senior roles, understands the issues very well. Not only that, but was at the FDIC in a bank supervisory senior role under Sheila Bair during the financial crisis. And as somebody told me, if you can survive that, you can survive anything. And so clearly brings a lot of great experience. And again, we have a really good relationship with her. So we are right at the center of all these discussions. And we hope that things are resolved in a way that leads to continuing good progress at FHFA and with the GSEs, and an understanding, for the depositories on the call, there's also the federal home loan banks in the mix. So I have a decent sized communications staff here, and they have written some things for me, which I've so far ignored. And I think I will have a look at what I'm supposed to be talking about. Oh, there's the matter of what's going on Capitol Hill. This is a really intricate process, but I assure you that we're at the center of it, again, as we have been on the more mortgage-specific parts of the agenda. And what's going on is that the House Ways and Means Committee has put forth the first details on how to pay for this, call it what you will, let's just call it the Build Back Better agenda. It's hard to call it infrastructure because it's not infrastructure by any definition you or I are familiar with. How to pay for that. And in anticipation of this, back in, well, frankly, when the 2 Georgia Senate races went to the Democrats and the Senate flipped, that's when we knew taxes would be top of the agenda for this administration. So Susan Stewart, our chair, formed a tax task force, which Peter Norden, whom Rosemary spoke of earlier, is the chair, along with Matt Rocco from our commercial multifamily side. So it's a board level task force that was preparing for all of the possible tax related pay-fors for this enormous package. And so that has been meeting regularly, prioritizing which issues matter most to us, deciding which other issues we could work in coalition with other interested groups, particularly trade associations, but perhaps not take the lead because there's lots of other interested parties, as you might imagine, in Washington. But the update really is that there are several things that we were worried about that are not on the list of pay-fors. And those include 1031 exchanges, which are of particular importance on our commercial and multifamily side. But of course, you all know that they're used on the investment property side of the single family business as well. That is not on the list. We were very concerned about various proposals that would institute a minimum tax based on GAAP earnings. And while that doesn't sound unreasonable, if you earn some money, you ought to pay some tax. What it really was meant to do was prevent large companies who make lots of money from paying no taxes. But what it would have swept in was our members who retain mortgage servicing rights. And as you all know, when you book a loan, you book the MSR, you are booking the present value of the future cash flows from a GAAP perspective, right? So if you have a 25 basis point, in an oversimplified example, 25 basis point servicing fee, you think the loan is going to last for 4 years, you might book a full point of GAAP income the month you close the loan, but you don't see the first dollar of cash until the borrower starts making payments. This proposal would have incurred a tax liability based on your GAAP earnings, even though you didn't have the cash, which would have diverged from decades or even centuries, I'm not sure how long, practice of the IRS, which tries to marry up your cash earnings with your taxes. And you would have set up a situation where our members might have had to borrow money to pay taxes on income they hadn't yet seen. So anyway, we're glad that is not in the proposal. And they did not touch the capital gains treatment on the sale of residential real estate. So you know that an individual has a $250,000 exemption from capital gains tax on the sale of real estate, and a married couple $500,000. That has also not been touched. Now, we're not complacent on any of those three because the Senate is yet to weigh in, the broader House is yet to weigh in, but we have it on pretty good authority that those things that we had worried about are not planning to get reinserted as the process moves ahead. That leaves the area of the most concern, with those being not quite out of the way, but reasonable assurance they won't come back, is the treatment of non-C Corps. So there are a lot of S Corps partnerships that own particular independent mortgage banks. And there is included in the Ways and Means proposal a limit, a cap on deductions for 199A, which is the part of the code that affects those non-C Corp entities. There's also an inclusion of the 3.8% Obama tax regime into partnership income. And if you combine those, it's a pretty significant hit for companies that are not structured as C Corps. And the C Corp, as you know, the proposal is to take the rate to 26.5%. So we're not saying don't do anything with firms that aren't structured as C Corps. We're just saying maintain parity so that you don't have enormous advantages for being a C Corp versus structuring in another way. So it's very early days. This thing just came out Monday, as recently as what is today? Wednesday. As recently as Monday at 3 o'clock, we had an in-person meeting with a senior Democratic senator. We were on the phone with Mike Crapo, who's the ranking member of the Finance Committee, just yesterday afternoon. And I think there's a lot more to come on this, but as constituted, it would be While not a disaster because they didn't completely eliminate the 199A deductions, it certainly would hurt a lot of our members and in turn the consumers they serve. So we are being vigilant on that and working across the aisle to try to have that treatment changed. So where do we go from here? The full House, of course, has to vote on what these committees are putting forth. The Financial Services Committee is putting forth pieces of this, their energy components, their pharmaceutical components. And as you've seen, the Ways and Means piece does not include an increase in the SALT deduction, so state and local taxes, which is a non-starter for many Democrats in high-tax states like New York and New Jersey particularly, who are not going to support the package without that. And it's expensive. I forget it. Bill Kilmer told me it's $600 billion or so, it's a lot of money. So there's a lot more jockeying that's going to go on. And of course, you know that it then has to go to the Senate. And there's this guy from West Virginia who is, which is an increasingly, in fact, now a deep red state, and he's a Democrat representing that state. Of course, I'm talking about Joe Manchin, who has a great deal of leverage because the Democrats need all 50 votes plus Vice President Harris's vote to break a tie. So ultimately, you can look for the package to be pared back. The devil is in the details. We don't know what spending will be cut, and we don't know which pay-fors might stay in or even be increased. So we're working this night and day and looking for a result that balances the needs to pay for some of this rather than just piling onto our national debt, while also understanding the consequences if some of this isn't well thought out. So I'm going to just take let me say one other thing about that's MBA specific, and then I'll open it up for questions. We are very much looking forward to our annual convention in San Diego. We had our first in-person convention this week, our regulatory compliance convention here in Washington. And we are having a MISMO summit next week in Virginia. So we're back in business face to face. Our convention in San Diego is looking great. We have the Empower event that Marcia Davies runs for our women's networks on Saturday the 16th in San Diego. And then our conference is Sunday the 17th through Wednesday the 20th. San Diego and Southern California in general is extremely highly vaccinated. Over 81% of people 12 and older have the vaccine. And we are requiring, actually San Diego County is, but we'll put it in place, that convention goers be vaccinated or have a negative test within 72 hours so everyone can be confident that the people they're interacting with are safe. We've just announced One Republic as the Club MBA Act there. We have a great speaker list. I won't go through the whole thing, but just to let you know, we have over 2,400 already registered. We have over 100 exhibitors. Our sponsorships are well beyond our expectations. So please come to San Diego and get back in front of your peers. I always say that one doesn't join the mortgage business because one is a shrinking violet. There are a lot of gregarious people in this business. They want to be face-to-face. At least as of this moment, there are no mask requirements down there as long as we follow the vaccine or negative test. So it'll be actually face-to-face as opposed to eyes and forehead to eyes and forehead. So let me pause there. I'm really interested in what topics you're interested in and happy to field your questions. Thank you.
Hi, Bob. Just wanted to thank you very much for your presentation. Sorry to, was trying to unmute myself.
Sure.
I know if Robert and Jim can come back on, and also Mike, I'd love to have you guys just on the screen to be able to wrap up. So let's get them back on for you. They'll join you. There they go.
I actually have a question if I can ask it.
Sure.
Super.
Good morning, good afternoon, depending on where you're sitting, Bob. Thanks again for showing up for the conference. We appreciate it. We know you have a busy schedule. My question is as I've attended more and more national MBA meetings, and we're trying to run local organizations, we're dealing with pandemic, trying to decide, do we have in-person meetings? Do we do them via Zoom? From your standpoint, we're hearing all these reports about Zoom fatigue. We're hearing about people, getting sick of this, but at the same time, we're having problems trying to book venues and figure out what we're going to do. Can you maybe share with everybody, what you're seeing or your advice? Because we all want to be present, we all want to see each other, and when we have events, it's like getting out of a cage love fest. So I would just love, from a national perspective, any advice, etc., because we have at least 3 states represented here, what we can do on the local level to, ring the bell or beat the drum. Thank you.
Right. Sure. Yeah, great question. And I'm so fortunate to have Marcia Davies as my partner in crime, who is so good at all of the events that MBA does and all the conference and educational content. So she's the real expert, but I'll give you a few impressions of my own. I went in August to 2 conferences that normally, August is we're supposed to be on summer vacation, right? But there were a couple conferences that were rescheduled for August. One of them was the Great River MBA, which is Mississippi, Tennessee, Arkansas, and Missouri, which was held in Memphis. And it's at the Peabody Hotel. And they had to navigate a last minute, some kind of a structural problem in the ballroom at the Peabody. So they had to get shuttle buses and take us over to the convention center. And I think they had, 3-4 days notice of this change of venue. So luckily everybody was staying nearby and they made it work, and it was well attended. And then Western Secondary was in Orange County towards the end of August with about 650 people, and also went off without a hitch. And it's interesting because I was telling somebody this, and they said, well, were any cases reported as a result of either of those 2 events? I said, well, gee, I guess that's a good question. So we called the organizers to confirm, and indeed, they had not had any word that there had been any cases at either of those events. So that's just a little sampling of a couple of recent events that I've been to. I was also scheduled to speak the first week in October at the combined Maryland and DC MBA convention, and they opted to postpone. They're gonna do it next spring. So I know it's a little bit all over the map. I know that the COVID numbers differ quite radically around the country, although I'll point out that Tennessee was not exactly a poster child state for tons of vaccines and low cases, but everything went fine. And I do think there's some self-selection. Let's face it, if you are concerned, whether for your own health or the health of those you are around every day, you're probably gonna wait a little longer before you go to an event like this. So I think the people who come generally are lower risk and are probably vaccinated, and of course at our event you have to be vaccinated and or have a negative test within 3 days. So what we found so far, it's early days, is that desire to be in person is trumping, I shouldn't say trumping because it's really not that way. Everyone has to weigh their own risks, and I think people who are vaccinated are pretty confident that should there be some kind of breakthrough infection, which of course is less likely when you're with a bunch of other vaccinated people, that, knock on wood, it won't be very severe. At least that's what the epidemiologists are telling us. So that's kind of where we are. And we're just so excited and fortunate to be in a venue that is doing well. If we were asking all of our members to fly into the, name a state where things are, where emergency rooms are full and case counts are surging, we might have had a different decision.
Mr. Broeksmit, along those lines, many of us here today have had the opportunity to attend the National Advocacy Conference each spring. What's your you and your team's feeling on the future of that event? Are we going to be able to get back there and meet with our federal legislators in the future?
Yeah, great question. And I'll take a 30-second detour to tell those of you who don't know that that was one of my favorite MBA events when I was a member, and the access to the decision makers and the really iconic venues in Washington that we got exposure to was just great. And in my estimation, as that event wore on, we went from, instead of going to the Library of Congress or the Organization of American States or to all these great venues, we were in a windowless conference room in the Hilton with a shitty bar. So that was my line. And I said, all right, we're bringing this thing back. So we did go to the Library of Congress, I guess it was 2019. And 2020, we had the National Archives lined up, which is a really cool venue. And of course, we had to go virtual for that one. But the short answer to your question is we're very eager to get back face-to-face. Most elected representatives are meeting face-to-face with their constituents. We have a new development is that we have a townhouse on Capitol Hill that MBA has rented in perfect real estate timing. We signed the lease just before the pandemic. So the first year we didn't get too much use out of it, but that meeting that I'm referencing that I had just Monday was Senator Van Hollen, was at our townhouse. We've had fundraisers there already. So we've actually increased our presence on the Hill, our physical presence, and there's room for all of our lobbyists to office out of there. And of course, the elected representatives love to just walk over toward Union Station, which is more or less where this townhouse is, and meet with us versus having it be at a restaurant or some neutral site. So that's all a long way of saying that the National Advocacy Conference will be back in person. I think it was a good trial run to have this regulatory compliance conference in DC just this week. And let's hope that by the spring, we won't have to wear masks. So that was a masked event, although as soon as you have a bar, then you're actively drinking and you don't need the mask. So anyway, you know how it is. We'll navigate through it, but we're definitely committed to that being resuming its rightful place as a face-to-face conference.
I have a couple of questions. Can you hear me?
I can.
The first one I have is, and many in this audience know I'm not afraid of shameless plugs for MORPAC, both for MBA nationally and for our Washington MBA. I'm just curious, certainly contributing in that manner is helpful. What you would say to people that really don't have a sense for how they can contribute or make a difference or get involved? I'm just curious what you would say to that, Bob, sitting in the role that you sit in.
Sure. Well, thank you for that. I too am a shameless advocate for both the Mortgage Action Alliance and MORPAC. The Mortgage Action Alliance is our free grassroots advocacy arm, where if you, like we, are concerned about some of these tax provisions, if you're a member of MA, you can, with a single click, send a letter to your representative and your two senators urging them to do what we consider to be the right thing, and whether it's a tax issue or any other issue. And another interesting part of that is we can customize MA to Washington specific, or whatever state you're in, events, so that if you've got a bad bill progressing in your legislature, we can mobilize all the people in your state to contact your local representatives and senators as well. So Mortgage Action Alliance is a big piece of it. We've grown that to about 70,000 members. Our biggest catalyst was the adverse market refi fee, where we generated 86,000 letters to representatives and senators, and we're so successful with that. But MORPAC is essential, and we set out a goal for the period ending December 31st, 2022. So we're approaching halfway, to raise $3 million. We have now cracked the top 10 in terms of trade association PACs in Washington. MORPAC makes contributions to both Republicans and Democrats. It was incredibly helpful that we had all these good relationships with Democrats, even as Republicans were in power, that when the House and Senate both flipped, it wasn't like, oh Lord, now what do we do? It was, we've got full-time lobbyists on the Democratic side as well. We have really good relationships and we didn't miss a beat. And we can't do that without MORPAC. And the most important thing with MORPAC is getting numbers of contributors, so that if you are in a position in your own company to authorize or to advocate with your executive to authorize a campaign that would let MBA solicit employees, it's fabulous when somebody gives $5,000, which is the legal maximum, to MORPAC, which I do and my wife Susan does every year. I say my 5,000 goes to Republicans, her 5,000 goes to Democrats, but whatever, you know, it is the case that we certainly support both parties. But it's equally or even more important to have large numbers of people involved, and you can do it through payroll deduction. You can have processors and underwriters and closers and God knows loan officers contributing. You know, I don't care if it's $100 or $1,500. It's really important to get that participation. And the thing that we've heard, and this may be counterintuitive, the thing that we've heard from members who get their employees involved is not that they feel burdened by, oh gee, another ask from corporate, but that they feel more engaged. They understand the issues better. They see how things that happen in Washington or Olympia affect your business, and you get a more engaged employee out of the deal, which, as I said, might be a little counterintuitive, but we hear it again and again. So anything that you can do along those lines, we'd love to engage with you.
Yeah, and I second that definitely in regards to all aspects on both sides. My last question, and you may or may not have any thoughts to this, so this is not to put you on the spot, but just reflecting on how much continues to be just dealt at the industry in the last couple of years. So much of what you and MBA have had to lead on has been what I consider like proactively trying to lead on what's reactive in many ways. I'm just curious if you could pick any sort of concept or initiative that you just got the choice to choose to work on and brainstorm about versus, you know, reacting to fight the right cause for our industry, if there's anything that comes to mind in regards to that.
Yes, there is. And we started on it before the pandemic, and it's affordable housing and closing the racial homeownership and therefore wealth gap. It really is, after all the efforts of various types in our industry and in this country, it really is embarrassing that the Black homeownership rate and the gap between the Black and white homeownership rate is as wide as it was in the late 60s when it was legal to discriminate. That's just, I don't care what side of the aisle you're on, it's just unacceptable. That is wrong. And so one of the first big steps I made when I got to MBA was taking Steve O'Connor, who many of you know, and so is a longtime MBA senior employee, and saying, you're going to focus exclusively on affordable housing. And now he has a team of a couple other people. He's got a council on the residential homeownership side, a council on the rental side. We are actually putting out next week our minority homeownership plan, which has really concrete steps. So Resbog was extremely involved in this. And so this is work that continues through all the noise, as he said, Rosemary, about all the stuff that we've been through, and is not in response to the change in administration where racial equity is a central tenet of everything the Biden administration does. Our work predates that. So we have a lot of credibility. We're not viewed as a Johnny-come-lately in this space. And we're going to make real progress. And we feel so passionately about it that our senior management team scorecard, which is a central component of our compensation, includes raising the Black homeownership rate in Memphis, which is one of the areas where we're concentrating, by a certain number of percentage points over the next 3 years. And you might say, geez, Bob, you run the national MBA. What do you care about Memphis? We have to prove we can do this in communities and then export what works to other places and really have this go around the country and with great partnerships and concrete results. And we have really exciting partners, both amongst our membership and with the government. FHFA is Tamara King, who runs this for us, just had a meeting with FHFA. She said, geez, I can't believe there were like 15 of them on the call, and Fannie and Freddie, of course, and Secretary Fudge at FHA. She's already agreed to our change in how student loan debt is calculated, which we've been working on for a long time, which definitely helps minority borrowers get onto that first rung of home ownership. So that is really the issue I would cite as one that, despite all the distractions and the pandemic and the political things and the nonsense at FHFA over the last couple of years, despite all that, we've made really good strides on this, and we will continue to. And I think you'll see Christy Furco, as she becomes chair in October, continue with Susan Stewart's, our current chair's, focus on this, which is really going to get some results.
I had no idea that was going to be your answer. I'll share to this group that as a member of Rosebog, I actually was on Affordable Housing Committee last year, and Steve O'Connor just invited me to join the Residential Minority Lending Council this year. And so one of the things that I'll share further, I think, on that, Bob, for this group, back to when we were talking about grassroots, like, so what kind of contribution or difference can I make at the front line? This is not a partisan issue. Like,
No.
the people that are involved in this committee, they are from all walks of life and all belief systems. And the thing that we find at heart that is creating so much of this gap truly is that it starts at an educational level and just a relationship level in terms of how we really can impact or change the world. And so the one thing that I would share with this group, since I'm chair in Washington and participating in those, is that some of the best ideas that we got last year, they come from the front line, especially from originators that experience every day what works well or doesn't work well, both in product and in concept. So if you have thoughts or ideas in terms of what you feel is creating a barrier on this or a gap, I would invite you to send them up through WMBA or to me directly, so that we make sure that our voices sort of move up the ladder from there, because it is, I think, what really is going to make the difference.
Well, and to underscore that point, when I came to Seattle a couple of years ago and spoke with your group, Rich had me into Home Street, and we heard some great things that they're doing and have been doing for years on workforce housing. And that was so exciting that we had Steve O'Connor come and make a separate trip to help understand what works in that regard and what can be spread, good best practices spread nationally. So I completely agree with that and invite others to do the same. Yes,
definitely. Diane Watson in particular at Home Street Bank, who many of you may know, has a great heart for this area and incredible ideas. And that just goes with what we're saying, for there are many of you out there that we may or may not know of that are doing similar things. And so definitely share your ideas. Thank you, Bob, for joining us today.
Absolutely.
Do we have any other questions from the group? I'd say it's back to you, Jim and Robert, the masters of ceremony.
Hardly, but thank you, Rosemary. We appreciate that. And Bob, fantastic. Thank you so much for all the incredible and important information you shared today with our association, with all of those that are on the call. You are a vital and important voice of our industry and for our livelihood. Those of us that have taken time to participate in this event yesterday and today, it just goes to show how these events can add value to what we do every day, and how many incredible people and leaders we have involved and volunteer and invest their time. And Bob, you of course are the head of it all. And thank you for your service. And we're looking forward to Christy continuing to carry on the torch. And she was a phenomenal speaker as well. And also thanks to Kwame and all the volunteers. Thank you all that have participated today. Robert, Mike, Mindy, the rest of my executive incoming team here for WMBA, Tony Fernandez, John Smith, Lisa Goldsmith for her past year's presidency. Thank you so much to everybody. And as we kind of wrap up today, I think along the same lines of what are we getting out of this and what do we do to keep it moving forward? I think that we're all volunteers, but we're all passionate about this industry and we're all connected because it's our livelihood. It's what's putting food on our table for our families. We recognize that this isn't just us selling a product. This is us providing a service to homeowners, to our communities, to the country. And so I, for one, know that whenever I think about some of these changes that we always have to navigate, at the end of the day, we're creating homeownership. And that's the most amazing, incredible thing that we can do for folks as they want to build wealth, as they want to achieve the dream. And as we move forward as all of these organizations together, we want to have a unified voice. And so as Rosemarie mentioned, and Bob, yourself, the more we can at a national level and locally be unified, share information, collaborate, that's what's going to help continue to drive this homeownership dream that our organizations are all committed to making. And so with that being said, I encourage everybody on the call today, volunteer, raise your hand, get involved, reach out to anybody, Robert, myself, Mike, any of the executive team, and say, hey, what can I do to help? Because there's plenty of committees, there's plenty of things that, find something that might be a passion for you, whether it be education or membership or legislative. These are really, really exciting and always changing components of our associations. And we always need folks to volunteer, share feedback with us. If there's something you want to see as a topic or a theme, let us know. And that's our goal, is to provide value and informative events. This Lenders Conference, it's a tremendous undertaking, and every year, those that put it together, you guys do an amazing job, and this year was no exception, especially in a virtual setting. To have this caliber of leaders participate was awesome. And so thanks to everybody and everybody that put the time and effort. If there's any other questions you have, the chat box is still open. Feel free to plug it in. Otherwise, our emails are available to you online. And we're hoping next year, as things get back to somewhat normal, we can have more in-person events, legislative days, dinner meetings, all of these great things that make up our organization and all of the committed members that we have. So with that said, unless there's something else, I think we can wrap it up and get back to our busy days.
Thanks so much, everybody.
Thanks, Bob.